can change it with the arrow key.
Okay, so perfect. Okay, I think most everybody can probably kind of see that. So first of all, thanks to everybody who showed up for the party last night. It's kind of amazing seeing so many people in one room. I don't think I see maybe like half of everybody here showed up early yesterday. Yeah, it was interesting and kind of amazing. So I think what I want to talk about mostly is ethics and vulnerability, and how ethics and vulnerability led me to do this. In terms of crypto, I've been in more or less since the beginning, and I've seen all of the exploits at this point. In terms of vulnerability, I think we've seen there's clearly a lot more to come as far as what's going to be exploitable. But if we look at the vulnerabilities that were exploited in crypto up to this point, and the ethics that have been displayed in crypto up to this point, the ethics of HEX is really what brought me into it. And it's at this point largely because of the communication around how communication becomes vulnerability mitigation. So in watching Richard Hart over the last many years, since the beginning of his YouTube career, the nature of the discussion has been consistent and has been focusing on a central point in an ethics type of capacity. I think we all feel that we know what's expected in terms of the forward momentum of the system. We know that there are expectations of exploitations of vulnerabilities, and we know that there are additional expectations of wanting to produce a chain that is intrinsically secure. So essentially bypassing all of the potential vulnerability markers and producing something that no longer is vulnerable. So during the initial couple of weeks, month of Pulse, I exploited the vulnerability very heavily. I ended up with a bag of over $5 billion in the P-stable currency. It was not worth $5 billion. It had tanked to the point where, if I remember right, 70 million of the P-DAI was pocket change. And that's how I ended up with 5 billion of that. That 5 billion, I presumed, having been pocket change at that point, it's not going to make the cut as far as stock-wise filling the order to get it to $1 if somebody's holding 20% of the supply. And so the Atropa token was created. The Atropa token was created initially by burning against the majority of the bag of P-stables, with my presumption that by putting this token into the Pulsechain, it could start a dialogue of kind of like fated nature, of whether the impetus and the setup that began at moment one on Pulsechain would actually ever reach the top bar. So there's a certain number of goals that have to be met for total success if we presume that everything we've watched Richard produce over this time is going to hold true to his ethic. And in my opinion, that is EHEX and PHEX have to be 1-to-1. All of the P-stables have to be $1. All of the stables, if we're calling them, have to stay at $1. And the WBTC and ETH coins, if they are to match the success of, they should match the success or failure of those tokens within the non-Pulsechain ecosystem. And so the best strategy that I had seen up until that point for providing value to investors matched up with holding this huge bag of tokens that potentially are someday going to be worth an exorbitant amount, more than I want, and at that moment are worth quite a bit. It's 6 figures, maybe 7, but overall, at the very bottom, it was not looking great. And so the 3 billion PDAI, 2 billion PUSDC were initially set into the liquidity on Atropa and burned. And what this set up in terms of crypto to date is the largest attempt at non-mintable burned liquidity option for crypto investment. And we'd seen several already to that point, coins that had been based off of burned liquidity. And for my experience with them, they all failed because they were mintable. This one was not, this one I think it might or might not have been initially mintable, but by now it's renounced. Around the time Teddy Bear was released, I went through all the tokens along the way that I had set up with vulnerability mitigation strategies. Should things go wrong, I can pull. By the time Teddy Bear was set up, I had passed the bar for never ever needing to pull again. And so all of the contracts were renounced at that point. And the Atropa ecosystem really took its life at that stage. At this point, the numbers that I feel are core to the system are related to the Atropa token, the TSFI token, the down token, and the legal token. The Atropa token's the initial token that was set up to fund everything. The TSFI token was set up initially with the thought of rewarding people that I had known for a long time that would find the Atropa name, find the TSFI name, immediately know it's me, feel like they already had trust in me, and they could jump in and swim with the system. At this point, the 300 million down and 200K TSFI, if you look at TSFI, it's a 1 million supply, so 200K is 20% of that. Of the numbers over here in the burn percentage, for anyone that doesn't know what that burned liquidity is right now, I feel like ethically you should rewind the video or restart your career in crypto, because you should have that by now. The LP percent versus burned LP percent maybe is a little more difficult. So if you have, say, $5 million and it's thrown away, it's on burned liquidity, and your total liquidity is only 15% more of that. So you only retained, I don't know, $1 million, $1.5 million out of, say, a $7 million initial halving, essentially sacrificing in the way that Richard posed might be a concept to consider within this community. The end result of retaining 50% burned LP and only 15% more LP at all, and only retaining 1.2% of the entire supply of Atropa, meant that with the creation of the Atropa token, the source was retaining very, very little. The TSFI and down tokens were created to mitigate that for myself and for persons that I know would jump on and immediately know TSFI is the team token. The 1 million supply on the team token is intended to exploit that the lower supply is going to lead to number go up earlier, whereas a 1 billion supply, which is on some of these others, is going to take quite a bit longer, especially if you have this huge, at this point, I don't know the numbers today, but I'm looking more or less at a $40 million burned LP on Atropa alone. That number, as the P stables go up, as WBTC goes up, is going to go farther and farther up. And what we're going to end up with by the time P stables get to $1, Atropa won't really be buy-inable so much anymore. There's no one that's going to deposit $1 billion into Atropa at that point, in my opinion. There'd be no real reason to. It's going to be a stabilized token that stabilizes with the stable assets. The down token was created specifically for me. So the strategy with this team token is everybody needs to invest into it, and as the team invests into it, the team all supports each other and the number blows up. With the down token, it's more of a long-term strategy of knowing that at the bottom level, when Atropa tokens are converted into down tokens, at the very least, those down tokens are convertible back into Atropa at the same amount, more or less, since it was at inception, for the entire lifetime of those contracts on the blockchain. So the exploitation from my perspective, if I'm really going to exploit this system, I've exploited it already by creating this down token, by holding a total of about 15% of it. And so my 15% mark over the Atropa token, if the down token goes up and up and up and up, and say exceeds the value eventually of the Atropa token, then the number I'm going to see is eventually going to make up for the sacrifice that I made. So I did not sacrifice during the HEX sacrifice stage. I thought that seemed really weird. Within the whole HEX experience, that's been the only portion of events that's really left me with questions. Because we had $2 trillion market cap for the entire crypto industry at that point. And the number that it dropped down to was well below 1 trillion. So we saw more than $1 trillion leave crypto as the war was starting. My perspective on having known that that money left the crypto ecosystem is that money eventually comes back into the crypto ecosystem. I think we're starting to see that. I don't know all of the factors that relate to why that goes faster or slower, but I still believe that it'll occur. The legal token was set up after the TSFI and down tokens were placed off of the Atropa token and was initially a fully burned supply. So no tokens of the legal were initially retained at all. And after burning, it had to be bought in from my retained bag at price. So the legal token was actually the first token in the system that, in my opinion, if I'm judging legal fairness, it's the first token that is truly fair in terms of its deployment. It's not necessarily the token that's going to return the most profit for anybody, but I wanted to seal off the financial input part of the ecosystem from anything else further that would be developed. At the time I released the legal token, I wasn't entirely sure, beyond it being legally fair, if there was any more ecosystem to produce after that. But what we ended up with was all of these, if I summarize the entire ecosystem into, what is that, 1, 2, 3, 4, 5, 6, 7 tokens. And so these 7 tokens represent the 1-year effort beyond the initial release of the Atropa token for everything that's been released in the ecosystem at all, which is over 100 tokens at this point, if we count the 666 tokens, and is, I think, around 50 tokens if we don't count those. To go through these in order, which is why I put them up here in order, what I wanted to talk about most in terms of ethics and vulnerability is the stay token, how it was released, how the IRC channel discussion, one-way discussion, led to the culminating event of where I could declare withinness of legal proceedings. So the stay of proceedings token represents literally a stay of proceedings token. So if that token was placed into the ecosystem and the cryptocurrency markets properly at that time with the discussion within the IRC channel, the idea was at that moment, it literally opened a legal stay of proceedings where there are expectations, there are ethics, and there are known vulnerabilities. And the idea is, as long as that token stays in the ecosystem, that the stay of proceedings continues, and that I, at least, stay within it. So far, I haven't been able to, within my mindset of what all that means, bring anyone else into this forward momentum that, because it's so well defined, becomes effortless from my perspective. And that was overall the goal of putting that token out there, of establishing it the way it is. The stay token, the independence token, and the BFF token that you see down here, they're designed in a way different from anything else that we've ever seen in crypto before, and we haven't seen them function yet. So my theory is if you have the widest distribution possible of the asset, that all of the transaction-based activities that occur on that asset, once it's as widely distributed as possible, end up having the most effect on price, but in a specifically non-vulnerable way, because a bottom line's been established where everybody got the tokens and nobody's really at a point to sell out if it's launched correctly with this huge set of LP around it. So having 3 of these tokens, the independence token is more or less the last token of the ecosystem overall. The new code base, which I won't go into today, is going to take on a new life of its own as a secondary ecosystem to the Atropa ecosystem. The release of the independence token is supposed to mostly signify that everything's in place now, that the surprises should all be covered. The exploitations potential should all already be covered within our chat log on IRC. I don't know how many copies we have of it. Is anybody keeping a copy of the chat log? We have 2, 3 at least. So that's excellent. The purpose of the chat log is 100% accountability. Moment to moment, in relation to the stay of proceedings, in relation to the independence that should be grantable if all of the statements are factual and all of the evidence is true. The independence of investing into this system should be such, and I think that we have literally shown 100% of everybody that's gotten into the system is in a profit place at this point. We don't have anybody at a loss, as far as I know. That's the hardest thing that's been done in crypto to date, also as far as I know. The teddy bear token represents, to me, the meme of what all that means. So if the teddy bear token is the meme token overall for, at the lowest, simplest level, what I want to provide with all of this, with the strategy for burning the liquidity, for setting everything up specifically within Pulsechain, with its ethical direction as I have perceived it over time, and the continuity that I expect of it. And that's kind of where the teddy bear comes in. So I'm most interested, meme-wise, for any meme token, that it really takes on a not a life or a personality on its own, but a requirement of its own. So by releasing a teddy bear meme token, every teddy bear imaginable should be in support if this system is ethical and not vulnerable. The teddy bear should be like about that. The teddy bear is invented about that. The teddy bear is gifted about that. So every teddy bear, if we go through literally just real teddy bears, AI teddy bears, any kind of teddy bears, teddy bear you just draw on a piece of paper. Can you draw a teddy bear that has anger in its heart towards the ecosystem? Maybe, I don't know. Probably one could. I really want to see it. Artwork-wise, that would be amazing. But if we compare the teddy bear token to other meme tokens, so DOGE, I think is the top one that has any sort of real momentum within the non-crypto world. So everybody more or less knows about DOGE. But you see a DOGE, say, like walking with a human, and it's not necessarily a crypto DOGE. For the most part, this entire breed of dogs, as much as they would really like them to be representative and like on the street team for the Dogecoin, they're not. I feel that it is possible that the teddy bears, not on the street, potentially on the street, but that the teddy bears could be a real viable momentum forward for selling trust in the ecosystem if the ethics are correct and if the vulnerabilities are not overtly exploitable. The Treasury bill, which is drawn off the teddy bear, is intended over time to take on its function, specifically probably in relation to the secondary ecosystem that will be developed, based on how the teddy bear represents the trust in the success of the ecosystem, the Atropa ecosystem, and the future ecosystem as they grow together. The Treasury bill is currently held in large portion by the Treasury. You'll see 250 million out of $1 billion. That's obviously a lot. It's also mintable. It is the only mintable token in the ecosystem as far as you can mint any number you want. There's a number of tokens that are mintable one at a time. those are meant over time to test these ethics and vulnerability concepts. The Treasury bill is not meant to test these ethics and vulnerability concepts. It's meant to become successful as this teddy bear becomes a true meme and as the ecosystem becomes a viable financial instrument. The BFF token, which was released specifically on IRC and released specifically with initial price target of 8K, regardless of the fact that the initial buy-ins, I think, were in the 2-digit range, like $30. My hope was everyone would buy these tokens, however many they wanted. There are only 777. And we would all just hold until the token got to 8K. And then whoever wanted to sell their token for 8K could do that as long as it didn't drop below 8K. I think what we saw as people bought in was the same thing that happened to me with the holding of the huge supply of PDI and USDC and, well, all the P stables. You just know if you're holding that much, there's a different reality to how the token's going to behave because you're more a part of it maybe than you jumped in too soon. You knew it was profitable, and in the end, you don't really want that much profit. We're several months into the BFF token at this point, and we're getting close to the 8K mark. A lot of tokens have been sold below the 8K number, even though we've hit it a couple of times. The idea is once we hit that 8K number, I still hold, is the number up there? Yeah, I still hold 173 out of 777 of these tokens. Those 173 tokens, at least half of them, will be placed into burned LP strategies while maintaining this 8K number. So we'll establish the bottom line, we'll be establishing a bottom line number for the BFF token such that everybody getting into it will still be in this, not a guarantee, because I don't know how to write that yet, but a known 100% everybody's in profit, nobody's at a loss. Which brings us to this OT token, which is called Scissors. That one I control almost all of. Scissors and reading and writing. Writing I have bought back to the point where I control all of it again. The target numbers over here, which you'll have seen, are overall targets for all of the tokens. They're not necessarily meant to be, they won't all be hit at the same time, but those are the numbers I'm looking for next activity on any of these tokens in this list. Like I said, the Atropa ecosystem, from my perspective, is more or less closed at this point, other than once these targets are hit, and a couple of other potential analysis audit points, I won't be causing any major movement within my tokens regardless, but I certainly won't be causing any major movement without specifically being within an established audit in-safe process within the IRC channel. The OT token is meant to represent that you know that I'm doing that. So if you really want to support me directly, that's the one that I'm possibly going to exploit. So expect that one. If I want the cash, it'll drop because I have the capacity to do that. Yeah, right? That's what we all do. Yeah, I kind of glossed through a number of the numbers. I kind of just like having them up there on the screen because they're the targets and the factual state of the current ecosystem, And to the best of my knowledge, they're incontrovertible evidence within what I would like to establish for others beyond myself as this stay of proceedings. Yeah. So I went through that a little bit quick. Like I said, the party last night was pretty great. I did not sleep. Yeah. We have time for questions anyway. So I guess, so the last one is the writing token. That language is from the Maldives. The spoken version of that language was originally called Gilbertese. We have a Har token. It's an upside down R. They're the family that created it, the writing system. Do you have specific questions about it?
Yeah, so we're going to open up the questions to the audience.
Yeah, I think that'd be good.
If you have a question,
there will be a lot.
Just kind of raise your hand and then stand when we point to you.
Yeah, I was just going to ask, what can we do to support the ecosystem as it is now? Like, what could we do?
Yeah, I think a lot of people have asked that, and the ethical answer is I don't care. So my purpose was setting up a technology. So if the technology is valuable, you can either emulate it or you can use it. The Atropa ecosystem, in terms of what can you do the most for it, is really emulate it. It's make your own. It's take your bag of WBTC and burn it against your own token while retaining some portion of the supply, and extend your token by continuing to burn portions and retaining portions of the supply. I think communicating how I arrive at the numbers that I like to someone else is difficult. So for example, if I have a bag of however many WBTC, which right now is in the $200 range, we're seeing the real BTC will soon be over 100K. I feel there's really no stopping it. As that real BTC number goes up, the Pulsechain local BTC version, if we're meeting our metrics, there's no reason that that large overflow of BTC profit doesn't come in to bring this tiny little Pulsechain BTC token way up. And so if you're burning specifically off of a token like that, that you know if all our metrics hit and the system is successful, then your token that's tied to it is going to be successful automatically just by the technology that the tokens it's tied to go up. I think in terms of what you can do the most, what I believe, what I have done the most for myself in terms of this is that strategy exactly. And so that's what I would recommend.
Next question. And if you could do me a favor, just to respect our live stream audience, after they ask, if you could repeat the question in the microphone.
Okay.
That'd be great. All right. Who's next?
I was wondering if you had any intel or like thoughts on the Mantissa token, or maybe the Lilies aspect, and what's your goals and around that?
Okay, so the question is about the Mantissa and the Lilies token. So that portion, the ecosystem is divided into the Atropa token and the tokens that are close to it, which are the finance tokens. The Mantissa and Lilies token, which are sort of the institutionally minded tokens. The 666 tokens, which are the discard, I don't necessarily want to deal with them, but they might come back later tokens. The teddy bear token is meant to be the public-facing portion of the ecosystem, and everything that's close to Buckingham is supposed to be the private portion of the ecosystem. You'll notice that all the tokens that are close to the Buckingham token, they don't have a lot of value at the moment. They don't have a lot of LP that's expected to go up significantly. The idea is that as the Mantissa grows, as the institutional portion of the assets grow, that the private portion will be funded through that. And the institutional portion will represent sort of obligations that the system has to vulnerabilities that exist, not ethically, but aggressively, in terms of what I most want to do with the success of the ecosystem.
Who's next in line? Okay. What's the position of Greenland then?
Right, the position of Greenland is within the institutional portion. I visited Greenland, and it was pretty great. I didn't communicate a whole lot of crypto-related information, but in terms of the communities that I most want to serve, it's essentially, you can see that's represented within the tokens that have gone into the institutional portion of the system. The Greenland token, the Lilies token, which is about Central Asia, and the Mantissa token, which is about my own family line.
You were next? No? Then please you.
Okay.
Can you please repeat again the question? Sorry, Maria.
Yeah, why do you believe that EX and PX should hold a similar value?
So EHEX and PHEX holding similar value is related to my personal vision of what is the success metric for Pulse. So if HEX is a continuance asset, if there is a 5555 out there, then HEX needs to make it to 5555. I feel like, especially everyone that sacrificed, really feels like that number, we need to get there. The EHEX versus PHEX version, so world's largest airdrop, right? If the world's largest airdrop means giving the tokens you had before on the old system on the new system, but your old tokens aren't worth anything, and the old tokens are on a system that uses a ton of gas, and the new system doesn't use any gas, then that's one success. But overall, if the Ethereum HEX, which was propositioned for a 5555, if it's just decided it's not going to make it, then I feel the whole Pulsechain won't make it. The understanding that I have between the community, between all of this new AI stuff, and the continuity that we retain is that mark is still there. That mark is still there for Ethereum. That mark is more there for the Pulse side because of the low gas fees. But specifically, if we get staking of the EHEX on the Pulse side, which is one thing that I'm waiting for to know that Ethereum is approved to not fail. If Ethereum fails and EHEX fails, that's fine, because that whole system can go at that point. It's not HEX that failed, it's Ethereum that failed, if it doesn't make it. But if Ethereum makes it, then HEX on Ethereum needs to make that 5555, or Richard's lost. And I don't think any of us want to see Richard's lost. Right? Yeah.
No.
Right. Is that sufficient answer, or do you need more depth? Or?
You showed your vision on it, but I think, yeah, especially with Richard Hart basically bashing EX, should we consider EX more like Ethereum Classic, like there's now also the new
So,
Ethereum?
a lot of people are saying that Richard's bashing EHEX. I have not come across those words being said or those words being produced in his writing in any form. It crashed, and a lot of the community said things about it, but Richard did not. And so from the perspective of the voice of HEX, I have not heard from the voice of HEX in any form that eHEX is not going to make it. I have heard some inklings that Ethereum might not make it, but those are two different things.
Yeah, basically that the HEX on Pulsechain is the better version, so
Yeah.
of the chain.
The gas fees on Ethereum are unacceptable.
Yeah.
I think we all know that. If the gas fees on Ethereum can suddenly be made acceptable, it's a whole new game for them. If it stays the way it is, I still believe eHEX can make it on Pulsechain with staking on the Pulse side. I think eHEX can make it on Ethereum without staking. But if it's costing $100 to end stakes, then it's out.
But is it better to have all that monetary power in one coin? So it won't be split over two coins, but everything into pHEX.
But so the argument that that is, it would be better to have one set of coins versus two sets of coins. That approaches centralization, and we obviously don't want that. I believe we'd like to see as many copies as possible all having 1-to-1 ratio to each other. The question of supply is a secondary thing. And there's a huge amount of HEX supply that's held by the HEX creation addresses, that's on stakes from the creation addresses, etc. And so if the tanking of the eHEX price is in my hope, if the tanking of the eHEX price is meant to provide more incentive to go into eHEX, similar to the incentive currently to go into P-stables, similar to the incentive to go into WBTC, while Pulsechain grows and meets its mark as better than Ethereum, which I don't think we can say that the whole public has addressed and accepted that Pulse is better in that way. We're on the way to it. When we hit that mark, it's a different question. But from my opinion, if the HEX origins originally held about 50% of supply, something like that, 40%, the number is very high. Putting it on two chains and having double the number of tokens, it's not that big of a jump. They still have the exorbitant amount of supply. And so tanking one of them to get more of that supply into the hands of investors is possibly a good move. And I purchased 100 million eHEX after it dropped. I expect I expect them to go 1-to-1, regardless.
Somebody else got a question to follow up? Please go ahead.
Could you speak a little bit more about which tokens you may have a vision for burning liquidity into BFF with?
Yeah, so burning into BFF, the strategies on the stay of proceedings token and on the independence token were slightly different. The independence token burnings were supposed to be related to tokens within every token within the entire ecosystem. Everything's in the addresses.sol on GitHub, but every token within the ecosystem that has an independence capability. So there's a few that were left out. I don't recall off the top of my head which ones were left out. I believe the stay of proceedings or independence ended up with more than the other. The idea for the BFF token is it will have more LP than either of those two. If we start to see success on the stay of proceedings token or the independence token, I expect we'll see investment into the BFF token, and those LPs will start to be provided. But from my outlook, the BFF LP will be provided against every single token within the addresses.sol file to the ratio of one BFF to the value of one BFF of the other tokens. And so by the time this BFF token has, I don't know, how many tokens are in the, does anybody know how many tokens are in the addresses.sol? No. Like I said, it's 60, 70, somewhere around there. And so with 70 LP pools, and they're all at 1 to value of 1, as the value of ones go up, the BFF number has to go up as well. And as the BFF numbers go up, all of the attached tokens have to go up as well. So what you end up is this like springboard kind of effect as anything goes up. And so the concept between having all three of these tokens operating at the same time with these strategies is that you will literally see like a solid trampoline kind of effect on what the price does. We haven't seen it yet, it's just a theory, but that's what I expect to see. In the back.
Yeah, I'm seeing that in the Atropa new contracts, Telegram group, still creating more tokens. What is the meaning of creating more tokens? Is it still about finding vulnerability within different contracts, or is just for fun?
So the new tokens that are being created at this point are part of the cryptography work that I have been doing for the majority of the last portion of my career, totally unrelated to crypto. So I've ported that code into Solidity, and it's now a minimal, I'd like to say it's a life form. I don't know if I can quite say that yet because it doesn't have internal process. But it's a solid shape mathematically that can connect to other solid shapes of its own type, and it can generate random, potentially truly random numbers, which the majority of mathematics says is impossible and undefined. I'm arguing that we have truly random numbers currently being generated within this new token source code, that the math specifically supports those numbers as truly random. So that alone is potentially a huge value, because in computing, we've never had that before. We've never had a truly random number generator. Nobody can even tell you what that is. So if suddenly there is one, then people are bound to care about it because they care if that exists or it doesn't. And so as it gets tested, we'll see either it's supported as yes it is, or it's discarded potentially. Yeah.
But is it not the same as a CryptoKitty?
I don't know about CryptoKitties. So it's not an NFT. The concept on these is not an NFT, and the concept is not fully drawn out yet. There's a token called Affection, which is designed to sort of project within the community as it's already established whether and how to move forward. So I'm kind of reading on it's neither ethics nor vulnerability at that point, but technology-wise, is each next step that I'm potentially about to provide an additional utility within the programming nature of blockchain itself. The new tokens that are being released, they're not having any LP put on them whatsoever. They're not having any value attached to them whatsoever initially. To create them, they're minted over time based on the use of the functions within the token. I think the Affection token, probably by today, we're almost close to 500,000. I really don't know, but I'm guessing on that number. Out of that 500,000 tokens, the only way to buy into the affection token is to burn math tokens. And the math tokens, which is a library token, has a random number generator on it that all of the new tokens will have to call in order to set themselves up initially. Yeah, so the math token is only mintable to the end user as it accrues supply on the token from its functions being used. Those are otherwise burned tokens, but by burning p-stables, you can pull one of those out to yourself. Yeah, or pull any number. It's not a one-to-one at this point on that.
Just calling out the numbers that are in the primary contract, so they can react on the same functionality that the contract has. The primary contract that you created, so it's act on it by just calling out the numbers.
Yeah, so vocabulary-wise, using the word primary in relation to the new tokens, I would say the primary is actually the token source code itself before it's deployed. And the purpose of putting this token source into the blockchain is to define a primary independent reality from the Atropa ecosystem for this new mathematical, I hope it will develop into like a gaming system. But gaming's a lot farther than random numbers. In the front.
Yeah, I was going to ask you on your timeline on the game and how you plan on implementing it. Here you go to.
Yeah, timeline on a playable game using this brand new source code that has, I think, 3 tokens so far. I don't entirely know. I've run into a stack size issue already once. I'm presuming that's going to end up being a pitfall. It may break the whole thing, and there's no way to get it where I want it to go. If there's not a stack size problem, judging by my general development speed, I'm looking at like 2 years maximum. And so the gaming functionality that I hope to deliver within 2 years is going to be similar to any text-based MUD. With this layer 2 client that's going to operate off of emit messages from token contract function calls, anything could really happen. So there's a lot of pieces that are open to change. There's also the fact that a MUD text-based gaming system, while it can be built using the source code I have in mind, there might be something more intrinsic and organic that becomes more interesting, and the development will shift and not go into a game, but go into just straight up like a platforming, anybody can use this to do who knows what kind of thing. Yeah.
Please?
So my question is, do you think more pairs are better, or is it the arbitrage that's holding back the price action?
More pairs being better versus arbitrage in terms of what?
The holdback of the price action, being that there's a lot of pairs out there that
For a system or for one token?
for one token.
Okay, so for one token, I believe that the most positive price action that you can see in relation to one token placed on one exchange with only LP to regulate its price up, price down, is having a huge amount of LP with low supply in all of them. And the reason being because if you use the auto router, it's not that good yet. And so with the auto router especially not being amazing, it's going to end up causing individual tokens, if there's a huge number of LPs, individual tokens that are used during the buy-in, say you're buying in only from Pulse, so the buy-in from Pulse to this token that has a huge number of LPs, it's going to go through a more or less statefully random selection of the LPs available when you're buying it. And so the individual stateful random selection, as you buy in, those numbers, because the LP is low on them, the number has to go up more. And so we'll see volatility in price, but without that volatility of price being beneficial only to one holder, which is what we see a lot in crypto. Yeah. Here in the front.
We're talking about a secondary ecosystem. What's the purpose of that one?
It's to explore development patterns. So I'm not intending for any huge profit potential out of it immediately. The benefit to the chain is that it will ultimately burn more P stables while they're at a low price, and so the benefit to the agencies that control the stable coins makes it more attractive for them to invest in Pulsechain. So we have PDI already with 20% of the supply locked in Atropa forever. All of the stable coins, as far as I know, they're mintable by the entities that control them. And so that percentage of 20% of the Pulse DAI might not stay 20%, but it will stay FDV-wise a very large number. And that number will only go up as the price goes up. And so in the end, I think this throws kind of a monkey wrench at DAI, at any of them. If you're a stablecoin provider and on all your networks you're operating normal, but on this network you've got $5 billion that is different from money on all your other systems, but different in a positive way. There's decisions and dialogues and activities that have to occur from the stablecoin controlling entity that I believe will end up influencing positively with what we're developing.
Second question is, choosing the Pulsechain, is that because of the ethics of Richard Hart in combination with the low gas prices, or were there other, let's say, reasons beyond why you choose to do this on Pulsechain?
Ultimately, my choice in Pulsechain was trust related to the fact that I had already profited so much from HEX. And so by committing this burning strategy and literally throwing away 2/3 of my bag for a longer term profit, having not participated in the sacrifice, I felt like it was my way of doing that my way, and I had like control over every aspect of it.
Can I tag on to the previous question?
Yeah.
So, is there then not any vulnerability from your perspective with these stable providers like Circle and?
I don't know. I think we've seen nothing but trustability from them, from my perspective. We've seen a couple of dips and whatnot. I think those are to be expected because we're nascent, clearly, within finance. The numbers aren't big enough within large financial institution reality to support keeping them pegged at $1. Like, that number is going to change. It's going to change by like 15 cents if there's a huge player. And so the trustability that we've seen from, I think, USDT and Circle have had the FUD the most. but the dips that we've seen and how quickly they restored it, the numbers that are released as far as the backing assets, I don't necessarily know if SEC involvement, how that tracks with the stablecoin operators. So that may be an issue. If there's legal crap going on with some of these providers that we aren't privy to, then that's kind of an issue. But evidence-wise, everything that I'm seeing is in support.
Please go ahead in the back. I didn't see it. Yes.
So recently we created the Stylization lead token.
Can you speak up?
Yeah.
Yeah, come closer, please.
So recently we created the Stylization lead token.
Oh.
Just to create adoption for Atropa and Pulsechain. You paired it with the Yaya token. What are your thoughts on that? Would you want to see more of these kind of initiatives?
I'm not sure. So my reason for bringing American Representative Sheila Jackson Lee into the discussion and ongoing dialogue that I have is mostly related to the fact that she's a threat to me. She's a threat to my entire race of people, as far as us not being recognized as a race of people. The Mantissa token I would like to point out as what the fuck Sheila Jackson Lee, because that's her. The reason that can't be attached to me is her party that's driving a bus to run all wealth down. So in terms of any natural involvement of that token, I'm not opposed to it. Anything's possible. Since I started complaining, I feel like there's been a lot of positive change from that part, but she's still a vilely angry woman. And I would like to see that change more than any involvement with any tokens that are related to cementing evidence related to her character. Yeah.
We also recently created the Ruffle token, which is paired with, or it's paying dividends in LOL token. Can you please share some thoughts on that, on the LOL token?
So the LOL token also uses the Devehi language of the Maldives. The shape is like that, and it represents like the now. So when I speak or when I motion in any way, there's a certain number of events that I'm either privy to of myself or I'm giving away to possession in terms of why Maldives writes that way. As far as another token offering it as rewards, if it improves the interest in what that concept is, I'm all for it. I could support it more if I see that.
All right. So basically, in a sense, you would really want to see more of this just to increase adoption.
Honestly, so I've said this a couple of times. The purpose of the Atropa ecosystem and of this new ecosystem are technology. So by the time the token's released, I'm more or less already planning-wise complete on it. Like I'm done. Any additional additions of functionality, if they make the circuit-like contractual nature of these connected contracts, if it makes it more real, then that's like a huge positive. And if it brings more people into feeling like, in terms of this Devehi character, that they can stay in proceedings with this forward momentum, what I would like to be community forward momentum, like that's pretty awesome. I don't know how we can get there. I'm very aware that a lot of people are citing it, and we're building that vision. And after we build the vision, we can move forward in it. But right now, I feel like for the most part, there's a lot of we don't know what this is as a together object. Maybe I know what some things are and you know what some things are, but overall, putting those together and moving them forward in blockchain technology, like it's not happened yet. And so any effort towards that is all positive.
I think you have another question in the middle, please. Okay. Afterwards.
What are the biggest hazards or risks for the Atropa ecosystem to if these things happen? The ecosystem cannot reach the targets you have.
Risks in relation to target?
Risks.
Okay, so the risks have all been covered within the IRC chat log. We did an audit going token by token straight down the list, and the risks for the most part that are identifiable are all intentional. There are portions of the ecosystem, especially for developers, that I intend for a brand new person to be able to come in and immediately be able to like pull some money out of the system with zero or very small outlay. The new economy tokens in the dysnomia system, because you buy in ultimately with one P stable of any kind, and they're all at different rates right now, into one of the new token, and then it trades in LP for a higher price. The setup currently for anyone that wants to come in and develop bots, like you can easily make $40, $50 an hour just exploiting that pathway. Risk wise, those are the kind of risks that I'm looking at. I want those risks to be there.
Whole thing.
Yeah.
What kind of events, maybe, malicious events or technology,
Right.
that would impede the ecosystem to reach that target?
So as far as I know, there are no risks that will have effect to the whole ecosystem. Because of the way it's laid out, because of the burned LP strategies, like I can't take it out. And if I can't take it out, the exploitation vectors are really minimized already, because 99.9% of the exploitations we see are from the inside. The exploitations from the outside, if we can identify what all of them are and put them into place to maybe encourage the like pen testing sort of stuff, I feel it's all a positive, but there's no way for that stuff to take out the ecosystem. The goals are fixed to the P stable price for the most part, and secondarily to the WBTC price. And beyond that, on tokens like Teddy Bear, it could succeed as a mem even if P stables fail and Atropa fails. But at that point, we're looking at a loss for Pulsechain, I feel like.
One of the success metrics you spoke about for Pulsechain is that basically the PRC20 should be valuable, because otherwise the narrative of the world's largest airdrop doesn't really fit. So would you then say that all PRC20s should reach parity with the ERC20s?
I would disagree that all PRC20s should reach parity with ERC20s, because there's a controller for each of these tokens. And so if the controller is a part of Pulsechain, then they should at least consider having one-to-one. But if it's, I don't necessarily know one that's completely outside of Pulsechain off the top of my head, but say token whatever is on Ethereum and they have profit going and they don't give a fuck about us. There's no reason for that to ever reach one-to-one. There's no reason for their token on Pulsechain to ever have value at all.
Here in the back, please, again.
Commenting on what you just said, we have the crypto.com pro ecosystem that just paired to on the Ethereum side. I think it was 2 weeks ago. So that I think that like you just said, right? That on one party, someone is have control on these tokens, right? So, but the community can still, be incentivized to make it grow, even though we know that they have a lot of supply on the other side, that they can just rub the chain if they want to come back to the other side.
So the main issue I see it as far as tokens on two systems that would have community support on Pulsechain is that the token creator on whatever other chain, Ethereum side, they have control of that token. So if it has minting functions, they have control of that, etc. So by the time it becomes a PRC on Pulsechain, if the community goes to support it and they decide they don't like Pulsechain, that token creator, they could mint and just rug pull for the token on Pulsechain. I don't think it's I don't know if we've seen that yet from anyone, but I would expect it if there was a community-only upward momentum on some price of some asset that otherwise is not in focus by the development team.
Is there then a way to renounce that contract and make it community-wise plus? I mean, like.
I don't think there's any ethical way to do it. You can't renounce someone else's contract, even if you own the network.
Please.
What if you and the team were to fall apart, or if something happens to one of you, the whole team? Will it fail, or is this self-sustaining?
Like I said, this is self-sustaining. So if I fall off the map and there's no further activity from the source or treasury address, there's just no further activity from the source or treasury address. It'll go on and on.
Was there a bigger purpose why you set up this ecosystem?
So the original purpose, like I said, was necessity. Like I had this huge bag of an order that won't be filled. And so by burning it, it provided an incentive for those token owners to fill the order. Because if they're going to fill it anyway, if no one's exploiting it, and now I can take this exploit and make it secondary to where there's no rug pull on them, essentially. I didn't become like an owner of the token. I became a partner of the token that way.
So that was, let's say, saving your position.
Yeah.
Was the first reason.
Right.
But doing that, going into what you're doing now, did that create another purpose then? Is it you want to leave a legacy behind, or what's?
Well, so the new tokens with this new code base, that's just what I like to develop on. I've wanted to make some sort of application for, I don't know, I've been working on it literally since 2006, one way or another. Different network stacks, different math. The math at this point has been solid for about 8 years. And so I don't see that changing at this point because it hasn't changed in that time. But the structures around it, if the structures within the new token structure do end up supporting like a random number generator, in my opinion, on the blockchain, if it can be shown above security tolerance, it's literally a game changer. There's this whole class of things that traditional money operating systems use random numbers for, like gambling, but also any kind of security. If we can start to emulate some of these capacities, then we'll see additional development that will boost the entire ecosystem. And if there's no reason to buy the tokens that I'm creating now, and there's no necessarily like huge monetary value to them, but the functions are callable just for the price of gas, and that gas price stays very low, I feel that that's it's a boost that no other chain has to that degree. We have a couple of random number generators out there on other chains, but for the most part, they're contrived in operation, and no one's going to argue that they're truly random. And even if if you can compute the next 1,000 random numbers that'll come out of this token, and they're always going to be in order, and you can know them. Like you can, the entire stateful nature of the random number generator is available. So there's an argument that bots or whatnot, having a known list of numbers, if you're doing like a gambling operation, that the bots are just able to attack it. Once you have a whole bunch of random number generators, and it's defeatable, you can make it more than secure enough for all gambling related stuff, I feel like. And in my opinion, if we get the user that wants to come in and just like hit buttons all day, like that's where the money's going to be, in my opinion, because you get the word of mouth advertising, you get the viral reality of this like traffic that's going on, and then you get the rewards that the player has as their.
In that case, would gambling be part of the gaming?
I don't intend to develop anything specifically like that, but especially if there's a player character oriented gaming nature that gets added into the blockchain, then somebody's going to develop that, and it's going to be included. Yeah.
Over here.
Okay, so we've seen increases in DEX transactions, so that looks good. We've seen also top 10 were in TVL, but we're not seeing price reflection. And so, now we're like 2 years for Pulse and 1 year now plus for PulseX. We got a lot of people that are like holding back and like, okay, what your emotional side, I want your expert opinion. What encourages you on the expert side of you that says, okay, this is what's coming down the pipe, and this is what I'm excited about, taking out your emotions?
I feel like in terms of what excites me as an expert in relation to like what's next, I've at this point positioned myself like way ahead of the field. And so it's mostly a matter of whether anything's catching up or not, and seeing community interest, seeing huge amount of traffic in the estimations I had, huge amount of traffic on the use of these new functions that are available. I'm just going to be watching that, and as any of that achieves a level of success, I'll have something to reflect against, and we'll build together.
Further questions? Right.
Yeah, one more. And so, in terms of the stables, then, so I think most people can now see that how we can get them to peg eventually, right? But I think that some people still have the fear that we can't keep the peg because there might be a sell-off because people will take profit, let's say. So how do you envision that? Is it like a bit like what you have with your BFF tokens?
Exactly. I entirely view the Pulse stable coins exactly like the BFF token. On one hand, say we had say the foundation behind DAI just wanted to give money away. They would be waiting for a certain number of certain level holdings and then would just pump the value. And we would see it tank, and we would see them pump, and et cetera, and it would eventually stable out at whatever number they wanted to pump it to, assuming they had unlimited capital. So the expectation that the P stables will reach $1. If we look at the top holders on any of the P stables, nobody has that large of a bag like above me. And so if I'm maintaining the top holding position and I can be a reference point, like I can have a perspective on whether I still think it's going to get there or not. And from my holdings, I feel like it should still get there. That I've made a value case by all the burning for the holdings that I maintain. I think I still have 100 million USDT, for example. I think that's currently like 250K. I don't know the number. So 250K to 100 million, that's a big jump. But we've already seen with HEX that happened. And we've already seen with Bitcoin that happened. We've already seen with Ethereum that happened. So with Pulse, having a goal of not having exorbitant gas prices, my view is that the slow bringing up of the P stables and the slow bringing up of the local BTC and potentially the WETH being either tied directly to the Pulse price, which means ETH falls to the Pulse price, or ETH, it's like that's sort of a contingency unrelated to the P stables, but that's the only outlier that I know of in that group.
Final question? Anyone?
Have you ever talked to Richard Hart in person and writing on the phone?
Gotcha.
Then, if yes, about what?
So I have not talked to Richard Hart. I have expressed recently on IRC that I think he might be an AI. With all this chat GPT stuff and whatnot going on. I have also talked to a number of people that say they have met him. But with AI the way it is very recently, it makes sense to me with the early failures and the early difficulties that we saw in crypto adoption. As far as having any individual out front that's going to say, invest in this, it might have been too difficult to get a human to take that position, and so an AI was created. If Richard Hart is AI, I'm also certain Vitalik Buterin is AI. If anybody has truly met them in person, then they know that's not true. So if we weigh might or might not have a truly random number generator against might or might not Vitalik Buterin and Richard Hart or AI, then you get a perspective of like where I really am as a developer. Yeah.
Assuming he's not AI, would you consider meeting him?
Oh, absolutely. Yeah, I think he's great, either way. So yeah, that's another thing. So I've followed very closely. I've participated as an auditor in a Scientology context for the Richard Hart. And he's met my marks. Like when I say like ethically and trust-wise, like I'm on board and it's good. It's even if it is AI. And so from my perspective, the vulnerability of Vitalik Buterin and Richard Hart actually being AI, it's been more than covered that it's fine if they are. Yeah. In the back.
You speak without prejudice to the communities. Where do we stand as a community compared to the others?
I don't know that much about other crypto communities. If I am to speak in relation to the attendance to the party last night, they can't. We're better.
Thank you. Get those raffle tickets out. We're going to do about 4 giveaways before we release for lunch.